Now, we cannot not speak about Asian Paints if we're talking about this space, right? And although the stock is trading almost flat today and has failed to move in tandem with benchmarks, it in fact has lost over 20% in the last 6 months. What is exactly not working for this paint giant as opposed to Kansai Nerolac that you highlighted just a few moments ago?
Right. So, the question really here is that whether Asian Paints charm that it had earlier and the color that it is always had is actually fading away or not. The stock has seen a significant downtick in trade in the past few months. It's down by about 20% in the last 6 months. Now, what's not working? Well, a couple of factors that are not working in favor of the company. Firstly, negative revenue, PAT, as well as value growth is taking place in the past few quarters. There's low single-digit volume growth that the company has witnessed overall. In terms of margins, they are under pressure, and this is on the back of inflationary pressure as well as demand being negligible for now in the past few quarters. Then we also have international profits which are on a declining trend. There is deteriorating cash conversion cycle that is also taking place, and the FI stake overall is seeing a downtick. It's on a downhill. In terms of promoter pledge, that is also increasing. We've seen a promoter pledge increase in the last quarter itself. Let's take a look at each of these factors in a detailed manner. Firstly, negative revenue and PAT growth. FY25, there was a revenue uptick of 35% versus that of 9 months FY25. There was a revenue downtick of 5%, and PAT, which was around 36% up in FY23, is down by about 30% in a 9 months FY25, and this is again on the back of inflationary pressure as well as no demand, negligible demand for the paint space. Next, we have the volume growth and value growth picture, where FY22 we saw a volume growth of 31% and a value growth of 36%, which has come down to 3% for volume growth in 9 months FY25 and a negative 4.8% in value growth as well. So, inflation is rising, but at the same time management is not being able to catch up in terms of price growth as well, because competition is hitting them hard. In terms of the next parameter, well, what's hurting the growth? There is sustained slowness overall in urban centers, and Asian Paints is the counter which has more concentration in the tier 1 and tier 2 cities. That is why it is seeing more pressure as compared to other paint players. In terms of competition, of course, Birla Opus is playing its role in terms of competition, slightly taking away market share from paint players, and Asian Paints also seeing that impact. The next reason is that there is down trading that is affecting the overall value delivery as well, and there is slowdown in government spending which is also impacting the overall industrial paint segment. And lastly, seasonality has played its role. Monsoons were extended, and because of which paint sector overall has seen an impact. Now, in terms of the next counter, what's causing the pressure in terms of margin? Price hikes are not matching the inflation, as I mentioned earlier as well, and overall the price hike that was taken in first half of FY25 stood at 12% versus that of inflation of around 3.3%. So, margins under pressure because of inflation itself. Now, in terms of the margin trend, 9 months FY25 stood at around 17.9%. The management has always said that the guided range of margin will be around 18 to 20%, but 9 months FY25 is at the lower end of what they have guided, which has been around 23% as well in FY24. Next, the international profit business is also declining, and there's declining growth of 19% seen in 9 months FY25 as well. Next factor is deteriorating cash conversion cycle, where we've seen that the cash conversion cycle overall has reduced, and that is also taking a toll on overall Asian Paints balance sheet as well. Now, in terms of FI reducing its stake, December 2021, FIIs were holding 20.38% stake in the counter, which has come down to 13.6% in December 2024. So, FIIs are also losing hope for this particular counter. In terms of what's the promoter pledge? Well, promoter pledge has gone up to 9.2% in December 24, and this has happened in the December 24 quarter itself, which was around 6.58% in December 23 and around 7.64% in December 21. Overall, in terms of valuation, well, despite all the challenges, are valuations still attractive is the question. FY21, the valuation stood at 77 times, which went to around 97 times. It's come down to 43 times. But so far, the management commentary coming in also does not look very promising. So the question really here is, if the valuations have come down to 43 times, despite the stock seeing a significant pressure, is this the right time to enter Asian Paints or not? In terms of how the stock performance has been, we've talked about it, 20% down 6 months, and its stock is also trading below its 200 daily moving average. Brokerages are also cutting their target prices in terms of what analyst recommendations suggest. Right now, there are 9 buys, 11 sells, and 19 holds for the counter. So this is the overall view as to what is happening with Asian Paints and whether one should invest in it or not.
Thank you for putting that into great perspective. Well, viewers, that's all the time we have on the show, but do stay tuned to NDTV Profit for more news and updates.